or something like that one. So in this case now, we don't have any reserve fund, but we have what? Profit and loss account, all right? So first step is that you're going to do some calculation for me, please. Let's see if we can get something. So, all right, first thing is first, right? All right, so first thing is first. They say debtors are raised at what? 5% of what? At a 5% discount. Therefore, that would be 5 divided by 100 times times 21,000. And that would equal to how much, by the way? Somebody tell me, man, why am I so slow? So there will be 1,050. Then now, you would subtract the 1,050 from 21,000 minus 1,050, and that would equal to
19,950.
All right. Now that would be your realized value for data, which is this one. All right. Good. Stock realized at 7,000, which is this, and building realized at 42,000, which is as you should have seen a while ago. Now, you see realized expenses are 1,500. Debtors buildings are paid in full. Now, yes. So let's continue now. All right, so what the hell is I want to say this? No matter how you say them, bro. There's always someone that is worse than you. So then you gotta pay your dues. All right, so first thing you do is you realize an account. As to be transferred are stock, sundry debtors, building. All right, so those are the three, right? Stock, sundry debtors, and building, right? And the amounts would be, and you transfer them at their what? You transfer them at their book value, good? 7,500, 21,500, and 36,500. 21,500. All right, listen. Hold on, let me check somebody before I'm going further. I think I made an error a while ago. Slight error, not much, but slight. it again. I think it's somewhere up here, son. All right. Okay. 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 Right. Someone in the rest of the pay the bills. All right. It looks as if that the 5% should be of 21 to the 500, yeah? Not the 21,000, okay? You know, folks?
Yes, sir.
That is seen to me. So the 5% you would take of the amount before the provision is taken out, all right? Good. All right, let's continue then for that. Sorry, what? Yeah? That's my error. So the first thing you do is to put in the assets transfer at book value. It will be 75, 21.5, and 365. Good. And then now, afterwards, so you'd have put in this first, 75, 21.5, and the 365. The first step, right? And you put in all these, now you add them together, get 65,500. Then you would remember the steps again. You have to read these steps for yourself and remember them for yourself, all right? The next step now is to put in the payment of external liabilities, all right? Which was said a while ago that they were paid for so that the creditors and bills payable are paid in full. So therefore, you'd have put 28,000 and the 20,000 right there under bank, because in the realization account you must what? Debit realization and credit bank in this case, right? The steps, all I'm doing is to follow, all I'm doing, remember, is following the what? Steps. Good? Just remember that. All I'm doing is following the steps that should be followed. Just remind you. So that was the first step. Then the next step now would be to amounts of various external liabilities are closed by transferring them to the realization account. So your debit realization account, there you go. Sorry. Your debit external liabilities account, that's a different case. That's a different case. Let's see which one I'm looking now. Where is it? No. All right, see there. Payments of liabilities in cash, whether it be cash or bank, you would what? Debit realization account and what? Credit the cash, which is the payment of liabilities. This is the step that we looked at a while ago. Good. So when you're paying of liabilities in cash or bank, you debit realization and you what? Credit the bank or cash account. Good. That's That is why you have this on this side. These three. Good. One, 2. And also, if you realize an expense amount to 1 to 500, I have 1500 right there. So you add up these two and you get 4,500. Then you would add up these two now and keep them for a while and wait. So you'd add up 65,500 plus 49,500, and that will give you 115,000. So currently, the debit side is equal to 115,000. Remember that, all right? Let me put it in. So right here now, you have 115,000, right? So from here, so from here so to here so. So between this and this, you have 115,000, right? Good. The same. All right. Then now, you're gonna look on this side now. All right. There's a rule that is a provision for bad debts as well. The rule says, take out this back, this now. So. Look at provision and rule now. The rule says, all right, so the rule says, provisions and reserves against assets should be closed by crediting the realization account. Again, provisions and reserves against assets should be closed by crediting the realization account. So in this case now, you would in this case, you debit provision for doubtful debts, any depreciation, whatever it may be, and then what? Credit realization account with the figure. All right. That's the reason why now you have the 500 under the credit side in the realization account beside provision for bad debts. All right. Then also, next step now is that, remember the format again, right? The format says, the format, and you should also put you should also enter your liabilities value, 28,000, 20,000 in this case. Let's look ahead. Format. Format says all external liabilities account at what value must be entered. All right. And that will be 28,000 plus 20,000. Good. Then after which you will put in what next now? Next by the story is this. Put the format again. Amount what? Realized on what? Sale of various assets. And that in this case now would be these debtors, stock, and building. Debtors now is 20,425. Stock is 7,000 as you see up there. And then the building is what? 42,000. They're gonna add them up now and get 69,425. Then now you're gonna add up all of these and then you will get 117,925. Notice that this side originally was what? 115,000 third, Remember that, good? So therefore, in this case now, we have the realization account of a situation where the credit side is more than the what? Debit side. Now, when the credit side is more than the debit side, we have a what? Profit on realization. Good?
Yes,
However, when the debit side is greater than the credit side of the realization account, we have a loss on realization. So we have a profit now on realization now of 2,925. And this now will be shared individual 3, 2. So you're gonna have you would add 3 and 2, 5. Then you said, and I think the 3 is for Sonia and the 2 is for Mayank. So you'd have added 3 plus 2, 5, and then you would have multiplied them by this and get these figures. Good? That's that for that. Then you see the capital account as was done before. Now, I'm gonna highlight one thing to you though. The balance BD comes from the what? Balance sheet originally. Good? Remember that. See it here? $32,500 and the 11,500, right? Good. Then I'll go to the profit and loss now. The profit and loss figure in the question was 13,500. Remember that we have said that general reserve and profit and loss are treated the same way. You remember that, right? Remember that? See it here. See that there, so? Any balance of accumulated reserves, profit and loss, reserve fund and other reserves on the date of dissolution will be credited to the partner's capital accounts on the basis of what? Profit sharing ratio. Good. This is the reason why then that the 13.5 is done like this. So divide 25 into 3 and 2 and so forth. Anyways, I'm going to stop there for today because I have a class at 10 o'clock, all right? So you can finish reading through the document for yourself, like you have it for yourself now, and then you're going to start practicing the worksheet, the realization worksheet there. Okay?
Okay, sir.
The email to you guys, all right? Practice it, all right? Anyways, I wish you have a wonderful day now.
You too.
Bye-bye. Let's see what divine. Oh, even the record for sure. Even the record for sure. All right. Enjoy the folks.